As over here in the U.S., we continue to see these inflation concerns, and we saw the curve steepening. We saw tech stocks crumbling. This is our question of the day, and I throw it to you. How far can reflation trades go? And let me add the Asian angle to this. What do you see in terms of reflation trades going across the region?
Thank you. I think we got to see what's the backdrop of this inflationary pressure that we are seeing, and if it is against, comes with economic recovery, that means that we are likely to see higher wages coming through, and we are likely to see a lot of reopening trades, and a lot of this would also go hand in hand with the distribution of the vaccines that I think we are going through a different phase at the moment within Asia and in developed markets, where developed markets tends to so far have a faster pace of distribution of vaccines. So from that point of view, the economic growth would be at a different pace, but I think likely this is against the backdrop of economic growth, and that should be not so concerning for inflation.
Is that what you're seeing across China? We get those inflation numbers out of Beijing today, and it seems in your notes you say you like the domestic consumption names.
Yes, that's right. And I think the more important, I think it goes back to my point about how what is the backdrop of all this inflation scares and noises that we are hearing. Within China, it seems to set against an economic recovery. We are seeing this in the previous PMI numbers as well. And more importantly, when we look at the first quarter earnings of Chinese corporates that are coming through, they are reporting pretty good numbers, and we are seeing earnings growth supporting this economic growth that we are seeing. So from that point of view, I think where to be is the focus on domestic consumption. That structural trend continues.
What about the regulatory overhang then? Is that part over, particularly when you're taking a look at some of the tech and fintech names in China?
Unfortunately, it doesn't seem to be over. It seems that we are in the midst of it. And I think what you are seeing is that with the Chinese getting the COVID situation relatively under control, they have actually become more focused on making sure the broader economy is well positioned for a better quality of growth going forward. And that means regulating some of the industries that perhaps have grown too fast without adequate regulation. So we are seeing a lot of that coming through as we speak, and that came through over the course of last year and this year. So I'm afraid that is going to continue, but what that means is that it creates volatility and allow investors like us to be able to buy into the stocks at more attractive valuations, but we've got to be selective of which stocks we actually own within this space as well.
What are your assumptions when it comes to the direction of the US dollar? Because we see these highs when it comes to EM currencies, and obviously where we go from here is going to have a huge impact on the performance of Asian and emerging market assets.
From this point of view, I think as the economy within Asia recovers, and again, I think this goes back to my earlier point about the vaccine's pace of distribution. But I think if you look at the Chinese economy today, then we are likely to see a stronger CNY, and that is set against a weaker dollar. So a lot of this would depend on the economic recovery pace within Asia. But if that tends to come true, then we are likely to see stronger emerging market currencies.
We're seeing the Kospi under a little bit of pressure, but this, of course, after reaching a record high. Where do you see those tech trades in other economies like Korea or Taiwan going, especially given how essential some of their companies are in the semiconductor supply chain?
We remain positive on these names, and that's really because, but again, I think we got to be selective here, where within the technology space, there are companies that are less profitable. That tends to be a bit more pricey in this environment. And there are companies that are very profitable and they are reasonably priced in this environment. And some of that tend to be within the Korean and the Taiwan space. So companies like TSMC and Samsung Electronics are we believe are reasonably priced, strong profitability, and strong visibility as we are going through this semiconductor shortage at the moment, and as the economies reopen in developed markets and elsewhere around the world as well. What this means is that we are likely to see stronger consumer demand, and that they are the consumers of all these semiconductors.